Hi, good evening, everyone. This is Elkie here with you guys today. Welcome to our section tonight, which is Technical Strategy 101 Bottom Fishing. All right, okay. Good evening, everyone. Hi, everyone. Okay. Yep. I hope everyone have a good start of the week. Today we see quite a number of technology stocks has been trading higher, and it has been a stronger day. And as of right now, what we are seeing from the market is U.S. market is set for uh uh tech side is still leading the move. Okay, yeah, so hopefully we're gonna see the buying momentum on our technology stocks this morning gonna sustain and gonna prolong into tomorrow. Okay, so meanwhile, today we're gonna look into this strategy that we are very excited very excited about, which is bottom fishing, a strategy for investors to buy the potential low. And why this strategy at this moment? Okay, so I'm gonna share with you why I choose this strategy to share with you all at this point. Okay, so before we start the section today, so a little bit disclaimer. So the idea that I'm sharing today is purely opinion of my speakers. It's more for general information and also for knowledge education purposes. Okay, yeah, so in between I'm gonna put on some of the key studies, some of the stocks as an example. Okay, so it shouldn't be taken as investment advice. So if you really want to interested in those stocks or any of these, or if you have any questions, do feel free to drop in the comments and we will go to that at the end of the section where we're gonna have a Q&A. All right, okay, yeah, so why this webinar at this time? Okay, I believe many of you has experienced 2026. 2026 is a bumpy year whereby we can see the market has been it started all well, and then we have the Donald Trump, Israel came in bombing Iran, and we had the markets since then gone into a volatile mood. And and while we seeing the potential of ceasefire last end of last month, unfortunately the US Iran war has reignited, and we are seeing the attack all over again. So things are pretty much uncertain and volatile for this year. Okay, I believe many of us right over here, we might feel a little bit uncomfortable. We are seeing all these negative headlines. We are having a new Fed chairman going up, potential rate hikes, or even at the local at back in Malaysia, we are seeing their state election. They are talking about early election, where even though our Prime Minister Anwar said that he gonna stay in Peng until the end of the durations, but still, these are some of the factors, some are things that been going on, and it led the markets going in a very choppy mode. Okay, and many investors, many of my clients actually came to me and said, oh, okay, this year is like really a tough year. If I've been trading Bursa, I don't know what to do. The tech stocks can be up, can be down. Okay, right now, these few weeks we are seeing a much better movement in the tech, but we know that when the Fed chair, when Kelvin Walsh talk about running a potential rate hike by the end of the year, we are seeing the sell off in tech. We also seen that before the Johor election, the foreign fund has been exiting. So the market has been really fearful and very clueless what's happening, what's gonna happen. Okay. Moreover, we are seeing in US market sites there's AI hype, even though many of all these tech counters like SanDisk, like Micron, they have skyrocketed. Their PE has been went up multiple times, and even some of them, they're talking about potential bubbles over all these tech stocks, where it actually led some of the fund rotational exiting some of the good blue chips, ignoring all these good companies, leaving all these companies at a undervalued price, and gone into all this AI hype. Okay, yeah, so that's what I've seen, that's it's happening to our market right now. And yet this could be a good time where we want to really look for some of the good long-term opportunities, especially those counter that hasn't been performing. Okay, but of course, although we are saying today we are gonna look into bottom fishing strategy, but our objective today is not to predict the exact bottom. Okay, but it's to share the process how we gonna be prepared for a if the bottom is happens, how to identify bottom, and how to look into the whole cycle. Okay, so these are some of the agenda that we're gonna talk about today. Okay, we're gonna look into what is actually bottom fishing, how to choose the stocks, how to execute it, and some action plan that can be taken if you are really interested. Okay, so thank you very much for joining our section today. Okay, my name is Elki. I'm your speaker for today, and I'm from Berjaya Securities. Okay, yep. So we're gonna carry on with understanding what's the market cycle. Okay, so in between, if you have any questions, do not hesitate to put under the comment, and we will go through it at the end of the section when it comes to the Q&A sections. Okay, so first, market cycle. Okay, um, I believe many of you guys, you might know that the markets, especially the retailers, the market participants, we have emotions. Um, all the participants of the markets, they have emotions, and market it flows along with the emotions. Okay, so we have this thing called emotional cycle of markets, whereby at the different phase, at different price level of the markets, the participants have this kind all these emotions moving along with the price. Okay, so when the market is starting to go up, it from recovery to optimism, then excitement, euphoria when hitting the peak. Okay, and when the market coming down, we are seeing the complacency, anxiety, fear, all this. Okay, and the best opportunity to buy, it always come in about at the capitulations and also hope, where this is the area whereby we can really do the bottom fishing, whereby the share price could be like really hitting the bottom. Okay, and forming the base before it can start rebounding. But also, this is the phase where it's the so-called hardest and also the toughest to get in, because at this point, at this stage, many traders, many investors actually has given up either to the market or to this particular stocks, and they don't think the stocks gonna rebound. Okay, so this is also the toughest time frame for an investor or market participants to get in, to get involved. But it is the time but this is the time where the institutional, where the fundamentalists, they might get involved. Okay, so if for those who are interested in this strategy, this is what we call as bottom fishing. Okay, whereby we are buying securities that it seems to be undervalued and also oversold, and especially um this strategy, it comes fits when many time often after the share price had dropped a lot. It has skipped down, and the share price had broke the average price and really gone into a level where it's really oversold. Okay, so for whoever that doing bottom fishing, they are believing that the drop in the share price, it is temporarily. The business is still there and it will recover to normal levels. Okay, but one misconception about bottom fishing, it is that for those who are executing bottom fishing strategy, they are buying not just because the price is lower, the price is so-called cheap. Okay, uh, because low can be always have a lower low. Okay, cheap always got a cheaper price. Okay, when you think that 1 ringgit is cheap after the share price drop from 5 ringgit to 1 ringgit, it can always go to 80 cents, 50 cents, or even 20 cents. Okay, yeah, so um For some of you guys that have been in the market for some time, you can try to think back how many of the stocks that you are holding, it dropped from 1 ringgit to 50 cents, and from 50 cents it can go to 20 cents, 10 cents, or even delisted some of the counters. Okay, uh, so for whoever that doing bottom fishing, they are buying not just because the price has been lower compared to the historical price. They are buying because one, they see that this company is undervalued, fundamentally undervalued. They could be running through the papers, the reports, the balance sheets. Okay, they do see the value in this company, and they do see the business is still ongoing. Okay, whereby another group of people, they could be buying based on technical charts. They are seeing that the selling has been overly done, but the selling pressure is easing. There are potentials in this company. There's still some growth catalyst, all this, and the potential of rebound, it could be there. It could be there. So that's why they are buying. But none of them, they are buying just because the price looks cheap. None. Okay. So if you're buying a stock thinking that, okay, because it dropped so much, it dropped 60%, 70%, the price has down so much already, it seems cheap, and then you go and buy, you're gonna get yourself into a trouble. All right. Okay. Yeah. So if you're doing that, basically you are catching a falling knife. Okay. So I always believe that if the share price drop so sharply, so drastically, there's always a reason behind. It could be any of the reason, right? I put up here. Okay, it could be due to high debt. It could be due to margin call. It could be due to the industry problem. Okay, but for those who are doing bottom fishing, they always have to do all this check. Okay, they must identify that this company that they are doing bottom fishing, like I said just now, the business is still healthy, the balance sheet is still strong, they still have growth catalysts, and of course for those who are trading on technical, they have to see that the price is stabilizing, is forming the bottoming. Okay, yeah, so that actually differentiates buying on the falling knife and also the bottom fishing strategy. All right, so, okay, so there could be 1001 reason why the market drops, why the share price has been taking a dive. Okay, and that it could be due to the company itself, it can be due to the businesses, it can be due to the industry. But if the reason why the drop in share price, it comes it's more towards macro events, like the slowdown in economy, like there's a market panic on certain events, or something like our local political turmoil, whereby some of the foreign funds, they're exiting. Okay, usually micro events, most of the time we will see the recovery in the micro event. We will see some if the governments or the World Bank, they doing their job, we should see the recovery in the economy. Hence, that would be a cycle whereby the market is going on and macro global view kind of down cycle, where this is a good time for performing bottom fishing strategy, because like I said just now, the business is still going, but it might be slower due to global environment. Okay, yeah, so it's really important for us to understand why the market is dropping. Is it due to the micro, due to the company aspects, or it's due to a bigger picture? Okay, yeah. So for some of you guys that might not be familiar with bottom fishing is actually a very common and very popular strategy, especially one of the most popular practitioner of bottom fishing is actually Warren Buffett, whereby he call it by value investing. Okay, Yeah, so that's why I put up a line by him, which is he always believed that when others are greedy, we really want to be careful, we want to be fearful. But when others are fearful, we want to be greedy and really go into some of these stocks that has been undervalued, has been cheap, and the business is still ongoing strongly and it will come back. Okay. Yeah, so you can see things are in line with the with what we are talking about the on the market emotion cycle, whereby we try to get in during the capitulations and also the hook phase. Okay, but if things so basically what we are trying to do right over here is buy low when the price is low and try to sell when the price is high, when everyone has been really when the hype is there, everyone is trying to buy, we try to sell it when it's overvalued. Okay, but if the strategy is so simple, such as buy low and sell high, why so many traders they fail from doing it? So the big, so the the biggest problem right over here is when when we retailers trying to buy so-called buy low sell high. One of the major problem that we have is we never know where is the lowest low. Okay, when the share price is coming down, when the share price is dropping, we do not know when the decline gonna stop. Okay, and one of the biggest problem that retailers have is retailers always trying to buy the lowest price. Okay, that's not okay. Let's not to say retailer. I will say that humans. Okay, every human will try to say I want to buy at the lowest price. Because if after I buy the share price continue drop, I don't feel good, right? Okay, yeah, so if I buy and immediately that's the lowest of the whole downstream, and then it start jumping up, I bought at the lowest. Wow, that kind of feel is like so satisfying. Okay, so every human every investor in this market, they are always trying to buy the exact lowest price. Okay, but the problem is we never know where is the lowest. Okay, so this is the problem that most humans, most retailers, they have. They do not have a process, they do not have a protocol on how to go in and buy when the share price is low. Okay, they just know that I want to buy at the lowest price ever for this company. Okay, so the probability of buying at the lowest is like so low, so thin, and we do not have methods, and hence that actually create the hesitancy, create the indecisiveness in our actions. Okay, so what will happen following that is many times retail investors, normal traders, they will keep on waiting and waiting and waiting, and when they do realize that the share price has reached the low and starts and has reached the low is when the share price has rebounded, because we'll never know that's the low after the share price rebound, right? Okay, yeah, and only when the share price rebound, then we know that, oh, that's actually the low that I missed out. Okay, and also when the share price has already rebounded and people start buying it, people start talking it, or even some of the analysts, they start covering it, say issuing buy call, and everyone talk about it, and that is the safest periods of time where people will feel okay, now is the time for me to go in and buy. And many analysts say that it still can go higher. Fundamentally, the share price, they have a higher target price, so I just go in and buy now. Okay, because I believe the business gonna do well for the next 3 months, 6 months, and a year or whatever. Okay, so 80% of the retailers, they gonna buy when the market has rebounded. Okay, and worst of them, because they buy high, buy high after the rebound. They tend to sell much earlier and then buy even higher when the share price never come back and continue to charge higher. Okay. Uh, so if any of you have been traded in this market for more than 7 or 8 years, okay, whereby you have experienced the COVID-19 period of time, okay, you can always check back what happened during the COVID-19 periods. In that year, we have glove counters, we have some of the pharmaceuticals counters, all this has been trading higher. Okay, so what happened during the time? Maybe not to you, maybe for someone that you know. Okay, what happened and what were their actions? Okay, yeah. Meanwhile, as for the professionals, okay, they start accumulating when they think the price has been reaching near the low level, when they think that it's undervalued, or they think that there is upcoming demand, pending demand coming in. Okay, so if they seeing that the industry gonna do well, even though the share price haven't reflected the thing, the price is still dropping, they will start to go in and accumulate stage by stage, tranche by tranche. Okay, yeah. So even though market fear is there, they will be start buying. Okay, yeah. So you can see that I still remember very clearly when the COVID-19 happened in 2019. Okay, 2019, the when everyone was worried about how COVID-19 gonna impact our markets, our economy, every stocks has been coming down. Even the glove counters. I think it's slightly after Chinese New Year. Okay, the glove counters still continue to take a dive. Is every single counter in the market, they are dropping. Okay, they are dropping. Okay, yeah. So that was the time where every retailers they are busy selling, but some of the professionals they are accumulating. Okay, some of the fund managers that I know, I talked to them and I heard all this from them. Okay, yeah. So that's basically the psychology of the markets. Okay, how people they react as the market is moved. Okay, so a very quick questions. How do you feel about current market right now? Okay, we have been talking so much. We have been saying that okay, we having wars, we have tech counters, we have AI hack. How do you feel about the markets? Do you think that the you are confident with the markets, you are optimistic with the markets, you are being neutral, or you are being fearful, or you already start buying right now? Okay, yeah. So sharing some of your answer right here under the comment, then we can see where is the most people they are in the phase, and from there we can also try to gauge. Okay, is this current market is in what kind of emotional phase at this moment? Okay, yeah. So please drop your comment right over there whether you are fearful or you're being neutral or you're being optimistic or you already buying the stocks. Okay, yeah. So so after knowing where the market is going, next we want to like really know when after understanding how the markets the bottom has been the market emotions lead to the different phases of the markets. Okay, um we do really want to know how to identify the bottom. Okay, and the bottom of the market or the bottom of the share price, it doesn't form in a day. Usually it come in phases. Okay, it is a process whereby we will experience the markets experiencing a sharp decline. There is panic selling, which that will be the very that will drive into a very long red bar, a very high volume, but that would and it also will mark the lowest point for that period of time. Okay, and after the panic selling wave, okay, that will be the time whereby many retailers they gonna be like many retailers they are no longer holding the shares, they feel hopeless, and the market from there it doesn't most of the time it doesn't rebound, make quick rebounds. It might rebound a little bit and then gone into sideways for some time. If quick, it might be a week, 2 weeks, or a month. Okay. If longer time, it could be over a period of 3 to 6 months also. Okay. So after a sideways, these are the time whereby the smart monies, the fund managers, they're gonna accumulate bit by bit slowly. Okay. Where at this point, most retailers, they no longer looking at this counter anymore. Okay. And eventually when smart money, they done building up their positions, and we will see some of the positive news coming in and the share price recovery. And that's actually how the bottom it formed. Okay, so if any of you like really interested in this operation, this move, okay, you can also study this thing called Wyckoff market cycle. Okay, where it's really based on the cycle of the market, where it go from accumulations um to rally to distributions and decline, and the whole cycle, it repeats over and over again. And understanding Wyckoff market cycle, it will really help you who are interested to really understand the mechanism behind how this bottom being formed. Okay, yeah. So so for us to pick up the bottom, pick up when is the time to pick up the bottom. Okay, we have to really we can do this 4 checkpoints. Okay, we can go through these 4 checkpoints. Okay, you can always ask yourself these 4 questions. If these 4 questions answer you, give you the answer yes. Okay, and that could be the time where you really want to considering start positioning in some. Okay, yeah. So the question number one, first, has the selling pressure weakened? Like we look at it just now. When the market come down, it doesn't make, or most of the time the share price doesn't make a V-shaped rebound. It will drop, slow down in the selling momentum, go flattish. Okay, for the accumulation to happen. And during this point, when it's forming the base, selling pressure, it has to be weakened. That's no longer selling pressure in the markets. Most of the people, most of the investors or traders who hold the shares, they have already sold, and most of the traders, they are no longer looking at this stock. So that's why the selling pressure, it would already weaken. Nobody is selling, and the price is stabilizing. Okay, so that would be giving us yes for the question number one and number two. Okay, and number three, whether the institution is accumulating, we're gonna look into some of the example later, which gonna tell us how to identify whether is if there's any accumulation or not. Okay, number four will be on the valuation part, and this part we're not gonna cover the valuation part today, where it's more fundamental driven. Okay, yeah, we're gonna touch and go a little bit. Okay, but for if any of you guys interested to know more how to value a company, um uh how to perform the valuation checkup on the company, you can drop in the comments, so we can reflect this to our research departments for them to arrange a webinar for that. Okay, if there's any demand, any interest for that. Okay, but today we're not going to touch on the valuation, but we will be focused on the technical parts, on how to identify a potential bottom. Okay, so there are a few signals, indications, where we can know that the bottom is forming, the share price or the market is forming a potential bottom. Okay, where the number one, it will be the market will be start forming a higher low. Okay, instead of continue to go into sideways or continue to coming down on the downtrend, we will be start seeing a high lows. We can also identify it by mapping it with some reversal chart patterns, or using some oscillators like stochastics or RSI to see if there's any divergence, and also any rebound from the oversold regions, and also based on the volume as well. Okay, so the first one that we're gonna look into is the will be the higher low, okay, higher low and higher high. Okay, so for the first method that we are looking in today to identify the potential change in trend, the potential forming, bottoming, and rebounds is looking into the charts, just using simple chart, naked charts with two moving average. One is 200 days and one is 20 days. Okay, mainly will be based on the 20 days. Okay, so you can see from this chart, this is Petronas chemical charts. Okay, whereby you can see the share price is still continue to come down, and it's staging lower low and lower high. This, so right over here is still a downtrend. Okay, very clearly it's still a downtrend, and the share price has been staying below the moving average line. Okay, yeah. So instead of making a sharp rebound, we can see that it start to go flattish and start to rebound ready. Okay, start to rebound at this point right over here in September, October last year. Okay, the the price, the Petronas chemical price, it can go sideways, or it can start making some rebounds. Okay, at for this case, it start to make a rebound and form actually a higher low, and upon the breakout, it formed into a higher high, indicating a changing in the trends. Okay, yeah. So just based on the pure chart itself, by identifying higher low and higher high, it actually helps us to understand that the trend is changing. Okay, and we can also couple include in a 20 days moving average to tell us that the price has started to turn into an uptrend. Okay, uh, so when the price rebounded above 30 days moving average while forming a higher low and breakout, this is the area, the critical area where we want to call this is the crossover area, the so-called the breakout area, and also the confirmation of the change in trend, because it stays on above the 20 days moving average and break into a higher high, telling us that the trend has changed into an uptrend, and it right along with the expansion of the 20 days moving average. Okay, so from here we identifying it's a potential bottom as the price goes sideways, the crossover telling us is a potential bottoming, and the confirmation only comes when it break into a high over here. Okay, yeah. So for professionals, where they might be going in buying bit by bit, buying lower, or even they could be buying as it rebounds. Okay, yeah. So after even after they bought, they could be experiencing some of the losses as the price dipping below the 20 days moving average. But when the share price rebounded and break into a high, this is the area where they will add in the very last tranche that they have on hand as the confirmation of the uptrend, and right along with the uptrend with confidence. Okay, but many traders, many retailers, or many of my clients, they do not have so many bullets. Okay, so it's really critical, really crucial for us to identify the critical point where it will be here. Okay, so instead of buying in as it's still dropping, okay, if you have a deep pockets, you want to execute with the same strategy, as the price, as you are seeing the price starting to rebound above the 20 days moving average. This is the area where you can start positioning so small. Okay, but the critical entry will be at the breakout over here, the highlighted area, where it's formed into a higher high level. Okay, so you can see similarly on Sunway Medical. Okay, Sunway Medical, after the IPO rally, the share price drop. Okay, and you can see it has been going down. Okay, so this is the sharp decline that we are talking about, the slowing down in the selling. Okay, it start going to sideways. Okay, and we seeing the share price start rebounding above 20 days moving average, sit along with the 20 days moving average, forming a higher low, and then the breakouts. And this is where we are seeing at 1 ringgit 85 cents, and today is almost 2 ringgits. That's almost the 10% rebound from the trend, the change in trend confirmations. Okay, yeah. So you can see the process, the whole process, it will be very similar, very identical, because we are following the same process over and over again. Okay, so again, we if we look into 99 speed mart. Okay, after the Chinese New Year, we are seeing the steep selling in 99 speed month, the share price, okay, until the selling pressure starts slowing down and is stabilizing along with the 200 moving average lines and start rebounding. Okay, so you can see right over here, it's the price has crossed over the 20 days moving average, again cross over 20 days moving average, again cross over 20 days moving average, but only after the third time the price able to stabilize above 20 days moving average and break into a higher high after forming a higher low over here. Okay, yeah. So if you have a deep pockets, you can be in here one tranche, second tranche, third tranche, and then when the share price rebounded to 3 ringgit 70 cents at current level, your average price will be somewhere around 3 ringgit 40 cents. Okay, but for those who have limited bullets, this is where you want to be in at 3 ringgit 60 cents, and right now you immediately after you in, you'll be in profit of about like 10 to 20 cents from where you enter. Okay, whereby you are entering on the exact turn points after the bottom has been confirmed. Okay, yeah. So the purpose of 200 days, we include 200 days in our chart is because sometimes 200 days it will serve as a good support in a longer term view, whereby some of the strong uptrend counters, when they retrace, they tend to find supports along the 200 days move average, where this is the point, the rebound from 200 days, sometimes it could serve as a good entry for those who want to accumulate some of the good blue chips, good counters. Okay, yeah. So you can see for 90 SP might touch on 200 moving average and rebound back above 20 days moving average. Hence, with two indications, with two signals, this could be a place where you might want to position a position, scaling in a small positions. Okay, before the rally came in. Okay, the confirmation came in. Okay, uh, so you can see similarly on top glove, on the same method wise, we can see for top glove as the share price continue dropping, uh, even when the share price continue dropping, there are times whereby the share price is rebounded above the 20 days move average and continue to record a new low. Okay, so imagine if you are buying every time when the share price rebound above the 20 days move average, then you'll be stuck with many positions, and you really need to have a deep pockets to sustain and holding on to this strategy. Okay, so that's why my suggestions for those who have limited bullets, you might really want to wait until the share price is formed into a higher low, okay, and rebound from 20 days moving average, and that's the area whereby you want to go in um, after recognizing that this is the bottom, and we going in at the rebound on the bottom confirmations. Okay, uh, so besides the identifying the change in trend, higher high, higher low, coupling with the moving average, one another method that we can look into will be the reversal chart patterns. Okay, and some of the typical reversal chart patterns that many they use to identify the bottoming will be round bottom, will be double bottom, and also head and shoulder. Okay, yeah. So chart patterns, many of you and I'm going to emphasize a little bit more on the volume for these chart patterns, okay, at during our session today, okay, because without volume supporting the chart patterns, many times this chart pattern it could fail and it could not, it might not able to perform strongly as what we are anticipating for the bottoming forming. Okay, so if we look the very first one for the PCAM, okay, we can see that the Petronas Chemical, the share price has been dropping and it formed a double rejection, so-called the double bottom at 2 ringgit 99 cents. Okay, 3 ringgit, I would say. Okay, so the very first thing is this is a double rejection from a round number figure, 3 ringgits. Okay, it bounced strongly, okay, with high volume. Okay, and if we compare to the very first leg of the selling downs, okay, you can see how steep, how steep and it sell down with volume, and in comparison, the second leg of the selling, the magnitude of the selling has been much weaker, and also the volume in comparison also much lower. Okay, and if we compare the rebounds, the volume of the rebound, the first leg, the rebounds, there's still some volume rebounding, okay, but in comparison to the second leg of rebounds, it was much stronger, and that's actually um signaling us that the conviction of buyers has been much stronger at this second leg rebounds, and especially when it has already formed into a double bottom rebound. Okay, so for traders who trade double bottom formations, the entry point will be at the break of the midpoint at this level, okay, which is at 3 ringgit 70 cents, and on the breakout of the double bottom, it will give us a targets of 70 cents higher. Okay, because the double bottom target will based on how from trout to the midpoints to the necklines. Okay, right over here is 70 cents, and our double bottom target will be from the neckline another 70 cents up, which is at somewhere around 4 ringgit 40 cents. Okay, which we see that upon the breakout it reached in 2 days. Okay, yeah, so for those who interested to learn and trade double bottom, it's really crucial to see the volume picking up on the second leg rebound, okay, which will tell us and also indicating the conviction of the buyers on this rebound. Okay, because if the volume is not there, it stands it stands a potential to touch the neckline, the midpoints, and then start coming back down. And if that happened, it could form into a triple bottom, quadruple bottom, or even gone into a consolidation rather than a double bottom rebound formation play. Okay. Uh, the second one will be on the rounding bottom. Okay. Rounding bottom is a very interesting formations whereby if any of you right over here are interested in IPO trading, okay, nowadays we have a lot of IPO, right? Okay, so many IPO after the initial rally, after the first week, the share price has rallied higher. Many times the share price will retrace and start pull back after the first week rally. Okay, some words, it open lower and continue to trade lower. Okay, but it's worth to look back into all these IPO stocks, and many times many of them they would start forming into a rounding bottom formations uh, in probably 3 months to 6 months time frame. Okay, yeah, why is it so? It's because um, for some of the traders, some of the investors who got the shares from let's say MITI from placement, they would want to take profits at as the IPO listed. Okay, and after this all these people who bought into this counter, who got the placement, they have exited the share. Okay, the share price will decline, and eventually when the selling activities has um diminishing or has so-called gone left over with those who are really committed for the long-term view of the company, that's the time where it formed into a flattish bottom and also some accumulations from long-term investor to come in. Okay, so that's the theory, the idea behind the rounding bottom. Okay, after the selling, after all these selling activities, they have finished, they are done with it. Okay, while all the shares are in long-term investor hand or smart money hands. Okay, while some accumulations happens. Okay, uh, we just have to wait patiently for the signal to pick up where the volume will start picking up. Okay, and share price it will react accordingly as well and forming into the completing the rounding bottom formations. Okay, uh, but one tricky thing about rounding bottom is there is no time frame indicated, whereby the when it's forming the base, when it's forming the bottom, for this case, for iSense case, it's quite it only took about 3 to 4 months to form it. Okay, but for some cases it can be 6 months, 9 months, a year, or even longer. Okay, yeah. So the tricky part is we do not know how long it gonna form the base, and but what we know is when the bottoming is formed and start picking up, usually the volume it will pick up as well. Okay, so if you are following some of the counters, they have been um selling down and start going to flattish formations with some signal of accumulations. You might really want to save it into your watch list and monitor it every day or every week, at least once a week. So whenever the volumes are picking up, the price starts staging higher. Those those are the period of time where it's giving us a very high probability of recognizing the bottom and start participating as the share price picking up and go higher. Okay, so similarly, the one-to-one target will based on from the rounding bottom to the lowest point of the rounding bottom, and then we just map it up. Okay, where for iSense wise is 62 cents from the 48 cents breakout point. Okay, uh, so the very last chart pattern that we're gonna look into today, it will be solar vest. Okay, solar vest whereby it will be on the inverted head and shoulder chart patterns. Okay, yeah. So um for solar vest wise, we can see that as the share price coming down at the very first beginning, the very strong selling swing, we see the picking up in the volume. The volume remains strong, telling us that the selling interest in the market is still very aggressive. Okay, uh, there are still many people, many traders, many investors, they are trying to sell. Okay, but as it rebound and making a lower low, we can see that on average the selling volume has declined. Okay, average the selling volume has declined. So this telling us that the selling pressure actually has weakening. Okay, and as it builds into a higher low and breaking out. Okay, so you can see that this is for inverted head and shoulder. The idea of where going in is the same as what we are looking at the trends high trend change in trend strategy just now. We go in when the share price form a higher low and break into a high high, whereby the higher low is actually the second shoulder for the head and shoulder patterns. And upon the breakout, we can see that the volume actually has generally start picking up slowly. Okay, yeah. So similarly, the target for the head and shoulder, it will be based on the lowest point to the neckline, and then we project it up higher. And as for solar vest case, it will be at 360 cents, which eventually it reach after in 2 months time. Okay. So we have looked into chart pattern. We have looked into some of the high and low with the moving average strategy. Okay. Um, so so before we proceed to the next methods, the third methods, basically I put up four methods to share with you guys. Okay, before we proceed to the third methods, I saw there's a questions asking about the rounding bottom. Okay, Gracia is asking, is it possible for a rounding bottom happen in a shorter time frame? Okay, I would say that generally rounding bottom it should be in a very big it should be in a much bigger time frame, time horizon kind of pattern, because for the share price to complete the decline, the easing off of the selling pressure, for the smart money to come in and do the accumulations, all this it needs time. That's why I couple it with IPO formations, because for the IPO to after the rally of the IPO, the selling downs, the accumulations, and also coming in line with the called the the stock freeze, whereby they can only sell after 6 months moratorium of the I for moratorium of selling. Okay, yeah, some of the IPO they have moratorium where they can only sell 3 months or 6 months later. Okay, so the rounding bottom, it will be like perfect strategy for the IPO formation, the trading of the IPO formations. Okay, so if you're looking into a much shorter time frame, I would say that instead of calling it as rounding bottom, it will be more towards like merely a pullback and a continuations. Okay, where it can happen within days or even 1 or 2 weeks. Okay, but of course, like what we learned from week market cycle, okay, week market cycle is it doesn't only apply on big time frame. In every single swing, up down swing that we are seeing in the markets, it's we can also identify the four phases of market cycle. So similarly, rounding bottom, yes, we don't call it market rounding bottom, but similarly in some of the daily chart, short time frame charts, you'll be seeing also the similar rounding formations. So the idea it will be the same. You will see the share price start pull back after recent rally, the slowing down in the selling of the pullback. It starts supporting maybe at the 20 days moving average, start rebounding with a bullish reversal candle with a hammer or what, and you know that's the point whereby it's forming so-called the short-term rounding bottom, and that's where you want to start looking it and going in. Okay, but with this, so when it rebound, you will see the volume also start picking up, and then the breakout of the previous high, and the rally continue. Okay, so the answer will be yes, but we don't call it rounding bottom lah. Okay, it will be just a pullback and continuation. All right, Gracia. Okay, so if there's any other questions, do feel free to share into the comment, and we will look into it. Okay, so following we're gonna look into RSI and the moment so-called the oscillator. Okay, so many I think RSI is one of the very common indicator that many traders, many investors, they have been using, trying to use it to find the bottoming in the share price. Okay, but one common problem with RSI is the RSI itself. It sometimes, if the trend is really strong, it can stay under the under the 30 levels for some time at the oversold. Okay, so for whoever that trading using RSI, you cannot just blindly to jump in and buy when the share price, the RSI line has entered the oversold. But instead of buy at the oversold, we want to have more confirmation, such as like bullish divergence, whereby the even though the share price still making a lower low, but RSI is actually making a high low, telling us that the momentum is exiting, the momentum is easing off, and we want to start getting engaged where that could be a potential bottom. Okay, so in this case, we can see that Dufu. Dufu in last year in March and April, while the share price is continue to go lower and forming into a lower low towards and break below 1 ringgit, we are seeing for the RSI chart wise, it has overly oversold, and instead of forming a lower low in the RSI, it is actually forming a higher low. Okay, and from there it actually as the rebound happened and cutting above the 20 days moving average, we are seeing the RSI actually has exited the oversold level and also crossed above the 50 levels to confirm us with us that the buying momentum has picked up. Okay, yeah. So it will be safer for any of the RSI practitioner that you combine it with the divergence reading in RSI when you're trying to pick up bottom. Okay, and that would be great tools for us to make early identifications of a potential bottoming. Okay, last but not least, it will be volume. Okay, so like what shared earlier. Okay, volume is really one of the key components when we are reading into chart and especially identifying uh if there is any accumulations, because for any of the smart money, any of the EC they want to buy, they need to buy it from markets, and volume is the footprint, is the prove that they are executing any of all these actions. Okay, yeah. So, a healthy bottom like what we seen in the chart pattern just now, when the trend is still going down, it's still coming down. Okay, if the volume is still strong, it's telling us that the selling trend is strong, and the as the volume diminishing, as the selling volume decreasing, okay, that could tell us that it is potentially forming a bottom, which the confirmation only comes when the buying volume start increasing. Okay, yeah. So we can see that right over here, this is the continuation of the Dufu just now, okay, whereby we can see that it formed the RSI divergence and start rebounding. Okay, uh, after the rebound, we can see, although we see the volume start picking up, okay, at this point, okay, very quickly, the price wasn't able to sustain and start trading into sideways. Okay, however, even though the share price is trading into sideways, we are seeing strong volume happening despite that the share price is going flat, going nowhere. Okay, so this is the sign of accumulation that we are talking about. Okay, because usually, if the share price is going nowhere, not many retailers will go in and buy because the share price is not going anywhere. So imagine if you're looking in at your watch list, Dufu, today is trading at 1 ringgit 10 cents, tomorrow is 1 ringgit 12, 13, back to 10 cents, 12, 13. Would you have the urge to go in and buy? Unlikely, right? Okay, so the same thing will happens to other retailers. When the share price is not going anywhere, most of the retailers are unlikely to go in and buy. So when the share price is still trading flat, but you are seeing strong volume to come in from time to time, okay, that's telling us that there is accumulation happening on this counter, and especially once the volume is getting lesser and lesser, diminishing volume during the sideway. That's the point telling us that the sellers of these markets is getting lesser and lesser. There's not much willing sellers willing to give it out to sell anymore, and those are the period of time that you really want to get ready for a potential surge in the share price breaking from the consolidations. Okay, so you can see on average from this area until this level, the volume has been diminishing, and as the volume start picking up with the bounce in the spike in the share price, that's the starting of the buying the bullish bull run of the Dufu. Okay, and that actually give us the bottoming of the share price of the Dufu. Okay, from 1 ringgit all the way to 2 ringgits in just two 2 months time. Okay, yep. Okay, so basically that would be the four different methods that we can look into identifying the bottom. The first one is identifying the change in trends, where with identifying the higher low, higher high, along with the moving crossover along with the moving average. Okay, the second one will be on the chart reversal chart pattern. The third one, it will be on the RSI with divergence, and the fourth one will be identify the accumulations, uh, bottoming accumulations, and the breakouts of the consolidations. Okay, based on volume. All right. Okay. So now we already equipped with the skill or the knowledge on how to identify the bottom. So what are the stocks that we should bottom fishing? Should we do it on every stocks? Okay. Basically no. Okay. Um, So at the very beginning of the session, we already discussed and talked that we really don't want to do bottom fishing on stocks that has been coming down on maybe um, deteriorating business activities, where they might have high debts, they are having some financial issues. Okay, so for bottom fishing, especially for traditional bottom fishing based on the fundamental, we really do want to focus on some of the aspects, some of the candidates, like they have to be the market leader of the industry, they have to be really still making earnings, they are still making money. Yeah. Okay, so these are some of the aspects that you can look into, and ask yourself, if you're gonna do bottom fishing, trying to buy these stocks when the share price is at the bottom, where everyone's still unwilling to buy into it, does this company match all these criteria? Okay, while we really we really want to avoid some of these companies, like what mentioned just now, is if there's any disruption in their business, if the business still can able to continue and function accordingly, okay, operating accordingly, or the industry itself is actually shrinking. Okay, yeah. So by doing all these checklists will help you to able to better filter some of these counters and not jumping in, catching the falling knife instead. Okay, yeah. So remember that it's really a very clear line between catching a falling knife and also doing bottom fishing on quality stocks. Okay, so do make sure that you perform all these checklists, identify your stocks really carefully, and only buy into these stocks that you know performing bottom fishing, to buy at the low for all these stocks. Okay, so hence based on this, the counters that you would really want to look into bottom fishing, it shouldn't be too many. It should be maybe somewhere around like 5 to 10 counters that you really understand their business, you do really know their history, their earnings, their performances, their management, so that to help you to identify where is the low point and to get in at the under value or the good price. Okay, based on the uh method that we just shared. Okay, yeah. So so what if the market is in a crisis, or the market is down on global events or macro events? Okay, so this is the time where we really want to start looking into some of these industries, some of these sectors, to identify which are those sectors we might want to focus first. Okay, because when it comes to that time, many of the counters, many of the companies, all of them, they will be trying to form a bottom. They will be taking dive, just like what we've seen in 2019, where COVID, the pandemic, it hit globally. All the counters, all the companies, the share price, it jumped, it dived. And those are the time we want to look into this page and ask ourselves, which are those sectors that we want to be focusing. Okay, so usually it will comes to the very first one you really want to focus will be financials, because money always run first. Okay, money, and then after that it will be those cyclical one like technologies. After that it will be come into some of these constructions with the government policies, all this. Okay, yeah, but the very first one that we always want to focus, it will be financials. Okay, where healthcare and plantation and all this, they only start picking up later when the market confidence, when the businesses they have resume and go as usual. Okay, so how so when when we have identified the potential bottom, how should we execute accordingly? Okay, so although at the very beginning part we have been saying that we want to identify the very crucial, very critical with the confirmation of the bottoming. Okay, uh we still don't want to just go in all at the time. Okay, yeah, so that's one way for whoever that's for whoever that interested to execute in more like a fund manager style. Okay, you can always break your entry into like three entry. Okay, so this is an example for you. You can break into 30, 30, 40, or you can do it even 20, 20, 60, or 20, 40, 20, 30, 50, or 20, 40, 40 also can. Okay, whereby uh the very first initial entry, it should be just an anchor. When you start seeing the price start forming flattish, the volume has been low, it has been finding the bottoming and start rebounding above the 20 days moving average. That is where you can start getting in with your initial entry. Okay, for this case it will be 30%. If the share price able to hold, pull back and hold along with the 20 days moving average, forming a higher low, that's where you can get in for your second tranche, seeing that this is potentially a confirmation, and on the breakout and forming into a higher low, and that's where you really confirm that this is the confirmation of the trend, and you get in the remaining 40%. Or you can combine with RSI and also the trend strategy, where RSI start forming a divergence, start crossing up the 20 days moving average, you start to get in your initial entry, and then as it's pull back to the 20 days moving average, start rebounding, then you can get in your remaining 30% and also break out on the 40% also can. Okay, but the gist over here is you never want to just get all in at once. Okay, always try to break it down into three position or four position to skew it in accordingly. Okay, yeah, and of course it really depends on what kind of stocks that you are dealing with. Okay, if the stocks that you're dealing with is like I said, is good stocks, blue chips, market leaders, then of course you can always convict more. But if today you are trading, okay, especially those counter that has been taking a very huge dive, like recently there's a counter dropping from 2 ringgit all the way to 10 13 14 cents. Okay, and the PE has been from few hundreds coming down. Okay, that I would say that is more towards a speculative play, and then you really want to just engage much smaller amount of you really want to raise a smaller amount of money of your capital to trade it. Okay, okay, so regardless today we are doing with high convictions or with a smaller amount, as it is a speculative trades. Okay, we really want to follow our trading plan. We always want to set our trading plan accordingly. Okay, never over trade any single trades, so that you can always exit and stop loss if the plan didn't turn out as what it is. Okay, so we can see on our earlier example on top glove, we had multiple crossover at 20 days moving average as the share price continue break into a lower low and continue trend lower. Okay, yeah. So whenever the share price break the low that we so called the bottom, okay, that's actually the sign telling us that we are wrong, and that is not the bottom, but the downtrend is continue prolonging and extending into a further decline. Okay, and that should be the stop loss level that we are looking at. Okay, and we really want to exit accordingly. So this risk management trading plan, it is really important when, especially when you are executing this bottom fishing strategy, because we know that trading bottom fishing is most of the time it's against the current ongoing trends. And if we do not on hold the stop loss, the disciplines accordingly, many times we might get stuck into a positions, and it would be really painful when we do realize that we are wrong and we need to cut loss. Okay, yeah. So make sure that you write it down. What is the maximum exposure that you want to get involved for this counter, and also what is your stop loss and why you are buying it. Whether the business is still ongoing, whether the margin is it high, or whether the uh is still the leader or the industry is still expanding. Okay, so that when the price is not acting as what you are expecting, you can always have all these things to check back and refer, and to help you to make a decision whether is it wise to cut loss, or is it actually getting cheaper for you to buy some more. Okay, yeah, but of course I will always favor stopping loss, take on the sidelines. Okay, and review the whole thing all over again and re-engage if needed to. Right, okay, yeah. So what we can so what we can see right over here is um what I've been sharing is that's the critical mindset that a bottom fisher should have. Okay, um focusing on the process, focusing on the training plan that we shared. Okay, be disciplined and also be patient. Okay, especially the patient part, it will be very critical, whereby we have talked that the bottom, it doesn't happen in a day, it doesn't happen in a week, it is a process that can take weeks and months to happen. Okay, yeah. So taking note that building such an expectation of you need to monitor it slowly and wait for the correct timing is very important when you are trying to execute a bottom fishing strategy. Okay, yep. So right over here, I also have includes bottom fishing decision tree for you guys to look into. So if you're interested, you can always print screen, or you can take picture of this, whereby you can always ask yourself these few questions, okay, before you decide to do a bottom fishing on for this counter. Okay, and always start whether the market is weak or not, because the if the market week is telling us that it could be the macro that driving down the share price, and it's not on the individual company itself. It's not the company has any problem with the business or the balance sheet or what. Okay, yeah. So following that, if the business is still ongoing, the growth is still there, then you know that the share price is coming down due to macro reason, and it could be temporarily. Okay, and as the technical base is forming, okay, then that could be the time whereby the selling pressure has been easing off, and we could be looking for for the timing for the timing for it to start turning upwards. Okay, and of course the last one will be whether the valuation is attractive, whether the PE is it lower than the average year PE, or is it lower than the average peers PE. And if all this is given, if given you the yes, and this is the time that you might really want to start building in the very first initial positions for this company. Okay, and again, you can see I have been preparing the checklist over and over again, because bottom fishing is a strategy that's it takes time, okay, but it requires a lot of patience, but when it happens, it's really really rewarding, okay, because you can see, like for the Dufu case, within a month or 2 months, the share price doubled. For PCAM as well, okay. So when we able to buy at the bottom, the share price, it can really double or even triple, and it's really rewarding. But before we go into any of all these counters, we really want to make sure we do our part. We really do our trading plan. We really make sure that it is the good company, is the correct company that we want to get in. Okay, so all these are checklists that you really want to look into it before you hit the button and make the purchase. Okay, uh, and of course, we also want to these are some of the common mistakes that most retailers they would commit, okay, like FOMO. They fear of missing out, they are buying too early, thinking that, oh, right now the share price is like really cheap and this could be the so-called the low, uh not knowing that there could be a lower low, okay, or even they are buying into weak companies, which just because the share price has been lower. Okay, yeah, so these are some of the common mistakes that you and me would really want to avoid when we are dealing with the bottom fishing strategy. Okay. So after these sessions, what you can do is you can always review your portfolio to ask yourself, okay, how many of these stocks that I have inside my portfolio, they are still doing well. Okay, they are coming down because of the business, or is it coming down of the macro environment? Okay, and if you're new into this investing, into this stock trading, this is time whereby you can start listing up some of the good company blue chips that you're interested, and start building into your watch list to ask yourself, all these company, they are still generating good revenue, is their revenue or their profit is still growing. And from the watch list, you can start monitoring their technical chart accordingly, whether it's going on the uptrend, or is it coming down, building into a base where giving us the opportunity to do the bottom fishing. Okay, and after you build this watch list, you do really want to track it every single week, or best it will be best if you look it every single day. Okay, yeah. So for me personally, every day I will go through all the charts, all the charts for all the counters that are inside my watch list, so that I can really get updated with what happening with the market, with the counter itself, whether it's moving along in line with the market conditions, or it is stronger or weaker than the markets. Okay, yeah. So to recap, okay, from today's sections, um, bottom fishing itself is not about buying at a low price. Okay, it's not just merely about buying at a low price. It's very much more than that. We are trying to buy at a undervalued price, where the share price, where the share price has been driven down by the sellers, where the um where the value is the value is above the price. Okay, and we do really want to focus on the good companies. Okay, uh then with the stock being selected, we want to track it, follow it, and wait for the bottoming of the bottoming formation, bottoming base of the counter, and scaling in accordingly. Okay, uh, and bottom fishing, it would be a more towards a you. It's unlikely to be you go in buy one day and then the next day you sell it. Okay, because imagine you waited 2 weeks, 4 weeks, a month, 2 months for the base to form and start trending higher. These are the stocks that you would really want to hold for a little bit longer. Okay, it could be a month, 2 months, 6 months, or even a year, 2 years down the road. Okay, as long the trend is continue to go higher and higher. Okay, so that's why I say bottom fishing, it could be a very rewarding strategy. Okay, but all the mindsets, all the strategy, all the protocol, it has to be in place accordingly. Okay, so for this video, we will keep it in our YouTube. So anytime if you really want to review, really want to revisit the idea of how to execute bot phishing accordingly, you can always play it back. Okay, or you can always contact any of our dealers. Okay, me and my team will always feel free to help with you guys. Okay, yeah. So that would mark the end of our section today. Right now will be the Q&A section. So if you have any questions about what we have talked just now, what we have shared, you can always put into the comment. Okay, or you can always scan this QR code to join us on our Facebook if you haven't joined yet, and we will be uh, we will be more than delightful to see that happen. Okay, so a question from Michelle. Okay, so Michelle is asking, can you show a live example like Coraza where the breakout point is above 1 ringgit 09? Should we buy at the 109 below or above? Okay, so let me switch it into the charts. Okay. Okay, give me a minute. I'm switching to the charts for Coraza. Okay, let me share my screen. All right. Okay. Okay. So we can see Coraza right over here. This is the chart for Coraza, if you can see it clearly. Okay. The very first thing when we look at the Coraza itself, okay, let me put on the RSI. Okay, we talked about RSI just now. Let's put on the RSI as well. Okay, we can see Coraza. Coraza itself has formed into sideways consolidations over here. Okay, so you can see Coraza when it's trading on sideways, uh, uh, for the for the early of this end of last year and early of this year, despite that it has been trading on sideways, you can see many times we are seeing a lot of all these strong candles. The buying is strong. Okay, and the breakout of 70 cents, it has drive the share price all over to 1 ringgit. Okay, so Coraza wise at this point right over here is riding along with the 20 days moving average. Okay, it's going on an uptrend. It has really moved away from the so-called bottoming phase. Okay, and it's going on an uptrend. And if we look into the recent pullback of Coraza, okay, if we look into the recent pullback of the Coraza, which happens in late June, we can see that when Coraza is going on a pullback, the volume it actually came lower accordingly. And as the buying interest resume, okay, the breakouts happening in on 14th of July last week, okay, the volume it pick up accordingly. So from the trend wise, we are seeing that when the Coraza is retracing, is selling down, okay, this is actually a very healthy pullback after the Coraza has moved from 70 cents to 1 ringgit. And this pullback is telling us that although the share price has moved from 70 cents to 1 ringgit more than 50%, okay, the during the pullback, the sellers the selling interest is actually not that strong. Okay, you can see the selling interest, the volume has been diminishing, it has been coming down, and we are not seeing the surge in the selling. The selling pressure is not that strong. So this is telling us that the uptrend it is likely to continue to remain intact, where many of these people who bought into Coraza, they still unwilling to sell. They are still seeing these stocks can go even higher, whereby whenever it start rebounding from 1 ringgit levels, the volume has picked up. Okay, and again, after the initial surge to 1 ringgit 10 cents something, the pullback, we are seeing the volume is not that much as well. Okay, still telling us that the selling interest is not as strong as the buying. Okay, whereby we should expect as the if continue to pressure higher, we should expect the trend continue to extend and continue to trade higher for Coraza. The chances for Coraza to trade higher will be great, I would say. Okay, so Tank is saying that some possible bottom fishing stocks that I'm currently monitoring. Okay, so some of these stocks that I'm monitoring very closely. Okay, but the formations is still not complete yet. Okay, like one of it I'm monitoring very closely on Genting. Okay, you can see the Genting, the share price has been coming down from 3 ringgits 40 cents to 2 ringgits. Okay, and the selling pressure, if you look into it, the selling pressure has been uh easing off. Okay, easing off. Okay, so what I'm looking over here is you can also see that in the bigger picture wise, although it's breaking into a lower low, but the is in the bigger picture, the it's already forming a divergence on the RSI. Okay, so what we need here is we really need convincing candles and also forming a higher low for Genting. Okay, at this point it is still testing back to 2 ringgit 17 cents level. Okay, I'm still monitoring very closely for Genting for a potential bottoming formations, and uh, as if it able to form a higher low and break into a higher high, that would be something that I might want to catch it. Okay, yeah. So Genting is one of the counters that I'm monitoring very closely. Okay, for potential bottoming play. Okay, uh, other than that, wise if we look into um basically if we look into like Asia Group is trading on a sideway. Okay, AX. Okay, basically is AX. Okay, so we can see AX is trading on a sideway, and the from time to time we have seen quite a strong surge in the volume. Okay, for me that could be the sign of accumulations. Okay, but we know that with as long the U.S. Iran war doesn't end, okay, the oil price remain high. It's quite difficult for Asia group to pick up. Okay, yeah, although it's trading on a sideway right now. Okay, so this one we really need to wait for the fundamentally to pick up, uh, given that that's a turnaround in the fundamental parts. Otherwise, the high oil price it would like really dampens the profitability and also the margin for the business. Okay, yeah. So these two are the so-called some counters that I'm monitoring very closely for hopefully to able to see some bottoming formations. Okay, which in line with our Visit Malaysia 2026 tourism play as well. Okay, other than that's one that's already rebounding, which is the 99 speed marks. We can see it has rebounding and start holding, forming into higher low, higher high kind of formations, and to see if it can pick up and go to revisit the 4 ringgit levels. Okay, this is the one that's just recently rebound and breakouts. Okay, so it could be a trend trend playing for 99 speed mods. Okay, yeah, so these are some of the counters that I'm monitoring. Okay, so let's take the very last questions. Okay, Donnie is asking about some average down Astro, some average up, and cleans. I don't really get what do you mean. Okay, but let's look at the Astro share price. Okay, okay, we can see Astro share price. The share price has been coming down. So Astro, the share price, you can see that it's from 3 ringgit something in 2014, and that's never stopped. It has been coming down. Okay, so imagine if you are buying when it's at 2 ringgit or even 1 ringgit, from 3 ringgit drop to 1 ringgit. That's 60% down already. For some, they might be thinking, hey, this is Astro, what a famous brand's name, okay, and it has dropped 60%, and that would be very cheap, dirt cheap already. But today is below 10 cents, okay, and what happened right over here, it is due to the changes in the industry, their product. Okay, I definitely can say that they are fighting very hard to recover the business, trying to create new demands for their products. There are multiple ways that they are changing, but they are trying out. Okay, but at this point, we are yet to see any achievement or any convincing result that they are producing. Okay, so that's why we are not seeing the any strong rebound in the share price, and this is mainly due to their business model, their industry. Okay, so this is what we mean by when we are going in for bottom fishing. We really want to ask ourselves if their business is sustainable, if their business is still growing, or there is a changing of their business environments. They are a better alternative compared to what they are offering. Okay, uh, so until we see Astro able to offer some products that's been unique and create their own edge and advantage in this media um, markets. Okay, otherwise the share price of Astro is it would be hard to rebound. Okay, yeah. All right, so okay. But of course, we can see as the share price it come to 6 cents something. Some of those might think that what more that they can lose. Okay, it's just 6 cents. Okay, so that's why we are seeing some of the buying interest start coming in. Okay, and this could be accumulation signal. Okay, start to come in as And this is the part where we might want to drill into the balance sheet to see if the company intrinsic value is it higher than the 6 cents share price at this point. Okay. All right. Okay. So the very last counter, the last chart that we're looking in is MClean. Okay, MClean wise, we can see that again is on the breakout of this range. Okay, of this range. Whereby you can see very clearly, even though the share price is going nowhere, there are spikes of the volume. Okay, telling us that's accumulations. Okay, and one thing that I'm more concerning on MClean is although the share price has been trading higher, okay, we can see recently the trading volume has been coming down slightly, okay, on average, okay. This telling us that the buying interest could be slowing down on MClean, okay. Although the business is still engage still very closely attached with the needs of the clean room, the demand for the clean room, all this, okay. But in short term wise, it might stand for a potential retracement pullback before we see uh, a resumption in the stronger buying interest on MClean. Okay. Yep. So that would mark the end of our section today. Okay. So for any of you, um if you are interested to hear more from us or join us, okay, do feel free to scan our QR codes, scan this QR code and follow us on our Facebook. And in moving for in early August, we will share our August market playbook, which most most of time we will be sharing the seasonal strategy for the month of August, and also we will be putting up our events for August as well. Okay, so thank you very much for joining our sessions, and I and wish you guys have a good day ahead. Thank you. Good night.